Hey guys, Joe here from JCS-Charting. What you see here is our latest update from Thursday evening. I came up with that here shown in blue descending broadening wedge. It triggered right here. It were in the pullback already. I told my members already to buy right here, and we were waiting for that trigger of that green sequence at 22,127. Same hourly chart after Friday's close. That green sequence we just talked about triggered, hit the first min target on the dot, then it pulled back to our another important level, 22,074. We were buying that on Friday as well, and then it grinded higher to hit all the min targets of that sequence and also all targets of that descending broadening wedge. 22,373 is still open for next week, and I tell you what's going to happen. Let's hop into it. Yeah, the last update was spot on. I told you that the decline before the long weekend is most likely to continue into Easter Monday. This year's etc. indication, it doesn't have the Easter Monday because the European markets were closed. The futures indication actually went much lower into that 20,600 area. On Tuesday we opened with a slightly gap down compared to that candle on Thursday before the long weekend. And we were buying that at 21,095 with another few buying options, which we sold into the end on Friday. By the way, April has been the most successful month for JCS-Charting. We gained over 10,000 DAX points already, and we are still holding longs from down here from 19,415, by the way. Now what happened is DAX opened with that gap. It was a quite nice reversal candle, and that gap on Wednesday was quite interesting because we had a very significant gap at 21,717 right here. That gap got never close to the downside, and it didn't get close from the other side neither. So what happened on Wednesday, we opened above that gap and we were selling a little bit into the morning session, and we did basically the same on Thursday as well, and both these candles didn't close that gap either. It's still gap support, and they both touched the EMA 50 on both days. So that is actually strong support, and we have quite a large runaway gap here now. And on Friday we continued. We didn't close that gap from Thursday, and that was a kind of indecision doji. However, I still think we're gonna run a little higher at the beginning of next week before we see a slight decline, also because of the gamma exposure we're gonna have a look now at. And now I would like to introduce something new at JCS-Charting. I'm running a trial presently for the advanced package, and I'm going to write an email newsletter very soon on a weekly or 2 weeks basis about the gamma exposure, the open interest, and the put call volume changes at DAX options, which reflect to the futures. I transferred all these levels into the cash price. And by the way, all these charts are made by myself. All the research has been done by myself. So I hope you appreciate that and leave me a comment how you like stuff like that. And if you want more of information or analyzers like that, you're welcome to join at www.jcs-charting.com. I won't post stuff like that for free. I hope you understand that there's too much work behind it, and at some point I need some appreciation from your side. Now what have I done? I placed the gamma exposure and the open interest into that chart. The gamma is these bars for the May and the June contract. The June contract is here already in there because usually there's much more money involved and there might be already big adjustments for June of the gamma. Now, what is the gamma? The gamma is basically the positioning of the option dealers, the still holders. They have the largest gamma at the 21,845. So let's say the 22,000 area. That's where they want the price to be at. Whenever price moves away from that level, it doesn't matter what direction, they are forced to hedge. They need to buy the underlying. In other words, they need to do something. They want the price to be balanced around that level. The open interest is what the traders do. That shows us where most bets are in what area. And most bets are obviously for both contracts around the 22,000 area. So right now, gamma and open interest is basically the same at a certain level. Now on Friday, we moved already away from that max pain into the 22,345 area. There's a large gamma already for June, but I would focus more on that gamma on May. That means DAX is moving in very thin air here at that 22,345. Even if we see Monday 22,500, a pullback from there is very likely that we're gonna see these 21,845. So the option dealers have the opportunity to adjust their pricing. That is basically what that gives us. For the information, note that these max pain levels, where they are large exposures, these levels usually act as magnet. Whenever price moves away from it, and if it accelerates to move away from it, that means there is a lot of hedging from the still holders, and this is actually what happened at the beginning of the year. DAX moved away 3,000 points from most of its gamma, and the dealers were actually forced to run with the open interest at DAX. And we jump into my Discord to give you an idea once you join what to expect. On the left side here you see all my main channels. I opened also a chapter on that's for the advanced only trading psychology. I write a few things on it. I try to do it on a weekly or a monthly basis whenever I find time. Now this is a DAX channel here on the left, and you see all these threads. The threads are just the different time frames I analyze. Sometimes I disappear because of inactivity. After 3 days, the daily doesn't get updated every day, or when something major actually changed. Now, I also check on the VDAX, which is the volatility index of the DAX, and that was actually a nice hint for that bottom on April 7th, that we spiked out of the Bollinger Bands by a lot. We're identifying these cycles here. We have these brackets here at the bottom, and usually the VDAX or the volatility, also the VIX for the US market, tells you more the truth than the index. Now here was a nice bottoming of volatility just before that breakout, and yeah, most likely we run into a low into the end of May in volatility, which translates to the DAX performance index that we should run into a high into April. And yeah, that was here my weekend analysis, by the way, on the daily basis. And there's also, for instance, user charts where you can update your own charts or explain something. There's a chat room for advanced members. My trade setups, for instance, that's where I mainly post stocks and stocks on options. For instance, Apple here, we bought that on the 9th of April at the pre-market at $169, which was right at the low. Also Tesla at 215, which was the low. And we also added buying call options at Apple at 169. By the way, there is also an intermediate trade channel, which is my main instrument of trading the swings. I do it with options only, so they are time based. So I usually buy the next OPEX, or I comment that I buy the next expiry for the big quarterly OPEX. This here, for instance, was our trade on Friday. We went long at 22,295. Now that was a level where we took our profits, and we were long from 22,075, gave us 220 points. That was a rebuy, by the way. That was here our trade from Tuesday, 21,095. We bought that, and we were taking profit at 22,100. That gave us 1,005 points just within 4 days. I also have a new chapter here, Trading Psychology. This is for advanced members only. I talk about different things. I explain financial instrument knowledge, hedging, volatility. These are here new chapters. They are not done yet. So advanced, we'll see that very soon as well. Yeah, I just showed you my positioning of stocks. So we're gonna flip into these small updates I made on the weekend. This is Apple, for instance. As you see, I came up with these trade ideas way in advance. We were looking for 205 to 198. Obviously, these levels didn't work, but I keep adjusting my charts. For instance, that red sequence here for Apple, that worked perfectly. That red sequence here triggered, zoomed out, below 194. So we knew 176 to 169 are min targets, and they need to be hit before that whole thing here turns around. And this is then what happened. That Wilbur wave stayed active. We have the same Wilbur wave at NVIDIA, by the way. This was also posted in advance here. We had that red sequence here, and it finished all the way down. That last target was at 91.29. This is also where I placed my large buying order, but that was the third one already, I believe. I started buying NVIDIA at the 100 level already, and that was after Friday's close. So that nice bullish Wilbur wave is still active. We have a magnet at 117.67. That is that green line. And once we get the daily close above it, we have that here as our min target zone, which matches that green target line very nicely. Amazon went a bit through our buying zone here. That was that green box. That green box sits there for quite a while. And also PayPal was a good buy we placed. Microsoft, we also bought that here after it finished that 5 waves impulse to the downside. That was a clean A, B, C correction, if you ask me. So we bought these min targets at 354 at Microsoft as well. Gold, for instance, they were also nice trades last week. We took profits. We actually placed a short right here where we had that pop gun, by the way. It went for that red sequence. That finished, and then we took our profits here in that min target zone at 32.96, and then we got a bullish Wilbur wave wedge in the hourly time frame, and I was trading that actually as well. We took our profits here of the shorts, and actually here, and then we went long at the 161 at 32.61, and as you can see, it followed that projection very nicely and was hitting that target line. It was a quick trade. 80 gold points is quite a lot. A quick look at the Dow Jones. Our 4-hour time frame here, we have a magnet at 48.82. I came up with that quite early. Once we were here at that bottom, we were hitting that level and rejected there once and twice. If you ask me, we are seeing a clean ABC correction, and for the beginning of next week, I assume that we strike that red resistance zone. We're going to see another pullback into that green zone. That red resistance is between 48.82 to 41.264 before. So a rejection first into the middle or end of next week before we run higher again. And a quick look at the Dow Theory. I showed that chart already last week. It's a weekly time frame. Transportations at the bottom, and at the top you see the industrials. We have a quite large positive divergence with the lows. The transportations actually formed a pop gun here on the weekly time frame, so I wonder if that pops up. Remember, whenever a pop gun is created and it pops, it doesn't matter in which direction, there's usually a pullback required after the first 100% duplication to either side. Yeah, we just talked about pop guns. This is a NASDAQ weekly cash chart. Same thing, we have a pop gun. That means that candle here in between these two candles is completely embedded. So that means the high and the low of this candle and this candle is higher and lower than the one in between. Trigger levels are 17,592, and that very bullish candle of last week, it's at 19,447. This is a 100% move, the first duplication to the upside, and this is to the downside. This is for the NASDAQ. Yeah, and this week I show a bit more than usual, so you get a better understanding what I show you every week. This is a daily chart of the NASDAQ. That was our projection into the make or break zone. That worked perfectly. That was 19,162. Members will confirm that I placed that level here way in advance. We rejected there once and twice with two major sell-offs. And now we are running higher, and we were breaking that mob level. That means 19,162 got broken to the upside. That means open targets are active now. These are our min targets, and these are these two, 19,874, 21,62. Usually after we trigger 100% sequence like that, there's usually a pullback associated with it. The trigger was already here. We might run a bit higher to close that gap at the beginning of next week. That's what I assume, 19,581, before we run into another nasty sell-off. Probably not as nasty as this one. I would appreciate if we close at least that gap here at 18,693 before we actually go for the min targets or even higher. If they do a nasty sell-off again like that, don't exclude this one here, that version. That's our alternative path to close even the gap at 17,808, but this one here is actually already enough at 18,276. Astro turning dates, that's what we use for timing. So that's started already Friday, so Monday, Tuesday is a minor turning date for the NASDAQ. Last but not least, the SP 500 weekly time frame here again, and there's also that pop gun as at the transportations and as at NASDAQ. Trigger levels 55.35 and 51. These are the weekly highs and lows from last week. Whenever they popped, expect a move, yes, into the 6,000 area for May at the SP 500. That could be also our half cycle top we are looking for. That might extend into week 15, 16 or 17. Still a pullback required, by the way, of that pop gun. Even there's a new one, it's not required, but most of the time it happens. 55, 59. That pullback trigger that could act as resistance, 5,600 pullback into the end or middle of next week before they close these gamma options, which are placed much, much higher at the S&P 500. And we talked about that last week. If you haven't watched that video, the low was just a back test of the all-time high of 2022. that means actually a kiss and goodbye if that low holds. That also means new all-time highs should be expected if that low holds. Yeah, and we switch onto the cash hourly chart of the S&P 500. A clean A, B, C as leg A, B, C as leg B to the downside. We were identifying that quite clearly last week. I also showed that in my last update. 50.92 got missed out by a little bit on Easter Monday, and then we rallied higher. That all was projected in advance, and now we are looking for that red resistance zone at the beginning of next week for another pullback to close the gap at 52.87 for the S&P 500. Yeah, that's about it. Weekend update is done. I see my members tomorrow at the blog, at the Discord, and I hope you enjoyed watching this market update. You are welcome to leave me a like or a nice comment. I see you around. Thank you and bye-bye.